Time now for top picks. Top pick number one from Hapstead today, Amgen, ticker symbol AMGN on the NASDAQ. Something from the biotech pharma space. Hap?
Yeah, we've had this one for a little while. I think I think we've held this for. We buy this for new clients all the time. And so when you ask us, okay, when did you buy it last? The one is the block that we did for investors, new investors coming in all the time. We've had it for about a year. We paid $246 for it. You can see we're up just a little bit. It's a nice move today. Good run over the last year. Now this one, long term, we think it's a fantastic business to own. The recent earnings were really good, and they increased earnings after that, which is what you like to see. It's not in the tech space or industrial, so it's got a little bit more stickiness. Its earnings are a little less dependent on the economic cycles, right? We like that. They also made really positive plans, Paul, to their pipeline. We know in biotech and pharma, that's the mother's milk of everything. Okay, we'll give you a break on this quarter because we love what you guys have coming down the pipeline. If the pipeline starts to rot a little bit or you get holes in it, that's when, that's when you see biotechs come and you just get pounded. It's also at a seasonal sweet spot. We look at technicals, fundamentals, and seasonal entry points, and this is the right time for biotech. Now, it doesn't mean when it's over we sell it, but as far as entries and exits, we look at the seasonality to try to get ahead, leg up on when to buy and when to sell. If we could, all the other things are equal with the technicals when we look at. So this is a good time to buy this one.
Okay. Number two, Berkshire Hathaway, a pretty familiar stock to our viewers, ticker symbol BRK.B. You know who's associated with this one. What do you think of Warren Buffett's Berkshire Hathaway? Yeah,
callers are probably like, yeah, that guy's cheating a bit. He's just getting Warren to do that. But we've got no ego. We've got no compulsion. We will drive an investment anywhere. Asset managers they know the world too. Why wouldn't we look at Warren Buffett and say, let's leverage off his eyes? There's some other great asset buyers too that we will look at. Brookfield Asset Management, we like them. There's Apollo. There's a bunch out there that, especially when the market goes south and it's bad out there, you're not sure what to do. Go put money in an asset manager. Let them figure out what to do. Now, this one is more timely because they're a conglomerate business, particularly insurance, which had a 72% upside in the latest earnings. It was lagging. Insurance has really been a lagging sector, and now it's started kicking in here with rates. They love higher rates. But this is one that makes everyone look pretty good. At $150 billion in cash. Now, most of our portfolios, whether they're particularly the tactical ones, we've got a lot of cash built up, T-bills. I'm not sure if Warren saw that we were doing that. That's what he's doing. But $150 billion cash, let him figure out how to deploy that and go for the ride. This is one that you can have a bit bigger position than a normal one. You could get up to 5 or 8, 10% of portfolio and be quite comfortable. There's also some other ones out there. But this is good timely. I would look at a half position right now. I wouldn't go full position, even though we're going to let him decide when to buy. The market's still going to sell if it needs to, if we saw something coming up through the fall. So buy a half position now and then wait for that next one.
Okay. AltaGas, number three, ticker symbol ALA on the TSX.
Yeah, now this one, we've been a part of AltaGas for a long time. We've recently, in the last year or two, when it was down in the dumps there, added a fair bit more to it. You can see that. This was actually a peak after many years of being down. If we went to the left side of the chart, we would see that. We've got a nice little upside there. This thing pays a nice little dividend. These guys do everything natural gas, including the extraction, terminaling, gas field gathering, processing, power generation, utility distribution, and energy management. So everything about gas. The recent earnings were decent. They're paying down some debt. They got a favorable ruling about the pipeline in the U.S. has had some issues here and there. They're selling a stake there, and that's going to accelerate their debt repayment. And then we had a really nice little breakout there. That chart showed that mid-July, and with a 4.3 dividend. This would be an energy name that you could buy right now if you wanted to sort of a 3 or 4% weight. Buy your half position right now. Don't even worry about it. If you have the option, depending where you invest, to do the drip, we do that. We just do we have the dividend payout to buy us more shares.
Do you need to have a positive view on natural gas, the commodity, to buy this stock?
Not as much. And natural gas, I thought of making that one of my top picks today, actually just the commodity, just because it's got a low base. Callers can go out there and look at UNG or any of the UNL, the pure gas plays, and it looks quite good. I know I saw while I was waiting in the green room a guy saying, we're full to the boots of natural gas, but the technicals look like it's basing nicely. We may, in the next year or two, as I touched on earlier, energy may become much more important. It may take a while to kind of get there. And so a name like AltaGas to get that 4.5% dividend or 4.3% dividend while you sort of figure out the world. There we go. You can see naturally what a crack crew there. So look at that. That's a pretty good risk to me. But these guys, to answer your question, Paul, they're not as dependent as a pipeline. It just takes its nickels as it goes by, right? So they could be pushing peanut butter through their pipelines, and they're taking their nickel. Now the fact that there's more going through it, yes, of course, it does help. It gets the name excited, a little bit more excited. So, but I wouldn't worry about that too much. So,
Hap, on behalf of our viewers, thanks a great deal for coming by.
Thanks for having me, Paul.
That is Hap Snedden. He's our guest on Market Call. We look forward to his appearance on the show again. Welcome back. Time now for Top Picks with Zach Curry. Number one is a company he referenced in passing during the show when he was answering a question on Topaz, and that's Tourmaline Oil, ticker symbol TOU on the Toronto Stock Exchange. Zach?
Yeah, I mean, Tourmaline is definitely best in class in terms of management team, which has a great history of growing and ultimately selling previous energy companies, but also their assets are fantastic. The balance sheet is the best, and I say that by way of being able to manage the debt levels, shareholder payouts, and Tourmaline pays a quarterly dividend, which was just recently increased, and that yields about 1.5% on the name. They also declare special dividends, which they've done. If you add that back, you're close to 7-8%. Very, very little debt levels, but they also not only are their assets great, they have, they're merging into the LNG side of things right now, so there's opportunity there. If anything actually formally materializes on the West Coast, that would be beneficial. But again, 80% weighted towards natural gas, but there are some oil assets. Wildfires have gotten in the way a little bit, but not substantially. Positive production numbers, best-in-class management team, best-in-class assets, and then again, that return to shareholders. The stock price has done well of late. It was in the below $60 range, but we continue to hold it and would add to it if it got down lower again.
Okay. Number two, Constellation Software, ticker symbol CSU in Toronto, the big software acquiring company.
Yeah, again, a wonderful compounder of capital. Lots of acquisitions. They recently announced one. If it closes, will result in a record year for Constellation deploying capital. They recently announced a rights offering to raise money to pay back their revolving credit line and add some firepower, if you will. In the past, they've done that in 2014, and they did buy a lot of assets at that time when they had that money. So hopefully that is an indicator of things to come. They've recently spun off some businesses, which we think is positive, and going back to that lithium question, allows those businesses on their own to fund themselves. But again, a wonderful management team, great balance sheet, and past history, which really would be foolish to bet against. And in Canada, there's technology names are few and far between, so it's nice to have one that does really well, and we think will continue to do well. Okay.
That's Tourmaline and Constellation. Number three in terms of top picks today from Zach Curry, Bank of America, BAC in New York. Zach?
Yeah, again, I think you're seeing lots of turmoil in the financial sector, certainly in the U.S. yesterday with those regional downgrades. But Bank of America has a strong balance sheet. They have what we like to call retail focus, which is the most stable in our view as you get. And again, you've seen it in Canada, not that there's much of a choice, but the biggest and the best continue to do well, and capital goes toward them. In the U.S., you have more options, but I think going forward, you are going to see quality prevail here, and the biggest and best in the U.S. will continue to receive investors' capital because of that certainty. And again, you're seeing great quarterly results there. Almost all the divisions were firing on all cylinders, and investment banking coming in there a little bit too. But for us, Bank of America is primarily, we hold it from the retail point of view, the stability of that. And again, it will be volatile, but return to shareholders, and we want best-in-class assets and management teams.
Okay. Zach Curry, thank you a great deal for your time today, and particularly on behalf of our viewers, thanks for answering those questions.
Absolutely. Thank you for having me.
That's Zach Curry. We'll have him back sometime, and we'll take a look back at the past the top picks he's just outlined, Tourmaline, Constellation, and Bank of America. Welcome back. We are in the home stretch. Time now for Paul Harris's top picks. Number one, Paul, on this day, Bank of America, ticker symbol BAC in New York.
Yeah, so we like Bank of America for a long time. It has about 10% of the deposits in the United States, which is very important because the issue for a lot of banks is, and what happened with Silicon Valley Bank is that the access to deposits are very important, and they've got this great retail franchise. It trades at 9 times earnings. It's trading at almost 1 times book. So from my perspective, it's not an expensive stock. They've got a good dividend yield. They've got lots of capital, so I don't worry about any of those things about the company. I think that the issue is that with this increasing interest rate environment, people have been worried about their balance sheet, which has a lot of longer-term debt on it, bonds on it, which has created some issues for banks. But I don't think that's a big issue for a bank like this because of their cheap funding costs. The other thing is that they're 1, 2, or 3 in the areas that they run their business in, whether it's investment banking, whether it's retail, whether it's credit cards, all these areas. So they have a wealth management. They have a very diversified business, which is important, I think, for banking. And I think they've done a very good job of reducing headcount and increasing technology. So I think that being a large bank like that, they have a real advantage over kind of mid-sized banks in the United States. I will say one thing that is hard for them to do is that they're not going to ever be able to buy another institution. They'll tend to have to grow organically. But I think that at these levels, I think you're buying a very cheap bank. I think that as the industry, as we improve, the economy improves, et cetera, down the road, they will do well. And they've done a good job of putting aside money for loan losses. And I think that that's not going to be as big an issue for them as people may think.
Okay. From banking in the U.S. to banking in Canada, TD Bank, Toronto Dominion, is your top pick, or your second top pick.
Yeah, so I think, like as I mentioned earlier on, I think banks in Canada look cheap at these levels. TD is certainly a well-capitalized bank. Their deal didn't go through with First Horizon, which gives them a lot more capital. They've got to get through the Cowen deal, which I think they will do well with. It's got a great dividend yield of almost 4.8%. It's trading at 10 times earnings today, 1.4 times book. They're not expensive. I think that I think that banking is a great business. They've got a great retail franchise in this country. They have a reasonable investment banking business, but I think that at these levels, over the next year or so, you will do very well with TD Bank. And I think that one of the things that hasn't done very well for them is their U.S. franchise. It still has a very low return on equity, but I think over a period of time that as they get more scale with that, it'll do much better. So I think that it's a great investment at these levels.
Okay, and back to the pharma sector we go. We've talked about it a couple of times on the show. Johnson & Johnson rounds out the top picks. Ticker symbol J&J in New York. Yeah,
so Johnson & Johnson is underperformed in the last little while. One of the things, it's a healthcare company, but it has 2 divisions. Well, it has 3 divisions, really, but it has really just 2 divisions now because they're selling off or they're IPOing their consumer business. They have a medical devices business and they have a pharma business. The medical devices business, I think, will continue to do well over the next little while simply because there's such a backlog on surgeries. So I think that as that catches up, the medical device business will continue to do well. The pharma business has some great opportunities in it. It's one of these companies that continues to increase their dividend on an ongoing basis. They're spinning out they own 90% of it presently of their consumer business, but they're spinning off the rest of it by the end of the year. I think by August, actually, it'll be gone and be given to existing shareholders, and they can decide what they want to do with that stock. So I think it's underperformed. I think in the next little while, it should do much better. I think if you buy it here, you get a great dividend, and you get a company that's increased their dividend for 54 years in a row. I think they've got a great balance sheet and lots of cash to be able to do a lot of things, especially I think buy certain assets that are out there that can help me grow their pharma business a lot more, and maybe their medical device business as well. So I think putting those things together, the stock's underperformed, but I think it's a good opportunity to buy the stock today.
Okay, we have had a couple of questions on pharma stocks in today's episode of Market Call. We get lots, generally speaking. What are some of the attributes in a big cap pharma stock that attracts you to the stock, and what characteristics would you avoid?
Well, I think the issue for a lot of these pharma companies is that they were looked at because of their, so the really big drugs in pharma, as far as I could tell, is that they're not drugs that actually solve an issue, right? So cholesterol drugs, like the statins and all stuff, you have to take them for the rest of your life effectively. So those big drugs don't solve anything. They seem to be what I would say kind of, they are billion-dollar drugs, but they don't solve anything. Even this obesity drug, you may have to take it for the rest of your life, right? So it's not like it's so those are the biggest drugs you see. The problem with pharma is that you may do cancers that all catch all free. So pharma, you may have a cancer drug, but it only may affect a small number of people. So I think that what you have to look for is, what kind of drugs are they coming to the market with? And I think that healthcare, as a general rule, as they're not expensive companies. They have good, decent dividend yields, but they also protect you in the market. They're defensive. I think people like that about them. But I think it really is about their pipeline and what kind of pipeline that they have, and what's the value of that pipeline per particular drug, right? Novo Nordisk and Eli Lilly have a massive opportunity with weight loss drugs, whereas some other company may find a cancer drug that's only going to be a $750 million drug because it only affects a certain number of people. So it's a very different world when you have to look at them, and you have to really concentrate on what drugs they have, what markets they're working in, and that's how I think you'd benefit from owning these companies.
Paul Harris, thank you very much on behalf of our viewers for your time today. Welcome back. Time now for Shane Obata's top picks. Number one on this day is NVIDIA, ticker symbol NVDA on the NASDAQ. Shane.
It's had a great year, but it's currently pulling back a little bit. But we think that, as I said before, the Q4 should be good for technology. I think investors want to have exposure to some of the momentum leaders, technology industrials, and then you also, I think, dividend growth as a style will also work. So combination of both. NVIDIA, I don't think needs any more introduction at this point. First and foremost beneficiary of the AI investment cycle. The stock is actually, we're more comfortable with the valuation now than we were before the blowout quarter that they had before. Earnings expectations were ratcheted higher, but we think this is just the beginning of the earnings upgrade cycle for the company. They report at the end of August, and we still think that numbers are too low for 2023 and 2024. Anecdotally, we're hearing from different people that it's very difficult to secure the top of the line NVIDIA chips that are used for artificial intelligence applications. For example, companies are saying that if you're planning to deploy, then it should be Q2, Q3 into next year. The demand is there for sure, and we don't see this petering off anytime soon. So I think this pullback is a buying opportunity.
Okay. NVIDIA, top pick number one. Top pick number two is in the luxury segment, LVMH, often referred to as Louis Vuitton. Why do you like this one?
Global leader in luxury and what we think is the best portfolio of brands in the world across various segments. So the recent quarter was a little bit weak on the wines and spirits side, but we like this business. It's very resilient. They're diversified across all their different brands. They're diversified across all their business segments, wines and spirits, jewelry, fashion and leather goods being the profit engine here. And similar to what we were saying about trying to think of the other side of things, maybe there's upside to estimates over the course of the next year, and that I don't think the higher end consumer has been under that much pressure. And so as we can move from a mentality of a potential economic deceleration to one of economic acceleration, that could actually lift estimates for this company going forward. And I think one thing that also doesn't hurt is China is lifting its ban on group travel to other countries. China's been a slow recovery, as we know, so I think that will help as well. But remains our top pick in luxury.
Is there a threat at all from the proposed merger of Coach, Michael Kors, Kate Spade, Versace, and other brands?
I don't think so. That's a good portfolio of assets, but I think LVMH skews even higher. It's not Hermes level expensive, but Louis Vuitton is it's a lot.
Okay. Top pick number three, Eaton, ticker symbol ETN on the New York Stock Exchange.
Eaton's been a great performer this year. This is mostly an electrical equipment company. So if we think about just the utility space, they're selling products that cover the whole range of from generation to distribution. And part of the reason the company's done so well is because it's U.S. centric. We've seen a lot more volatile economic data outside of North America, and I think it's fine to stick to lean into that. So this company is a key beneficiary of the electrification theme, electrify everything, if you want to call it that. So we continue to think this is a great place to be within the broader clean power space. And so Eaton recently had a record quarter, and they raised guidance for the year. We think organic growth probably tapers off a little bit next year, but this is a great long-term hold. It's a little bit expensive, trades at a slight premium to the group, but we think it's deserved given that they've shown that they can continuously win contracts.
This company makes industrial products for the commercial and aerospace markets, among other things. Shane, I want to thank you for being here, and I'm sure our viewers do too.
Thanks for having me.
Shane Obata was our guest here on Market Call.